What's going on, guys? Welcome to my first video on YouTube. On my channel I will be doing a lot about dividend investing and current stock picks I'm liking and sharing my thoughts to the community. The whole point of me doing this is to get double views on everything that we're doing and to try and make us some money along the way. As an investor, I'm a long-term investor, so I'm not looking at current, say, 6-month trends or looking to buy and sell a stock within a short period of time. I'm looking to buy and hold for life, if not like 20 years or so. So the first one we're going to start with today on the dividend channel is ABBVIE. ABBVIE over the past, say, 2-3 months has become at a very nice valuation. It hit highs of around $102 back in, I believe it was July-ish, and its current price per share after a rally 2 days ago is at 93.56 with a slight pullback. This price is it's very good, I believe, in my perspective. Analysts have got an upwards price target of $100, so you're probably looking at the best part of like a 7% discount at the minute. It's looking good, and that's just my view on the price. People could also argue with me, but very greatly valued at the minute, I believe, and I think it has room to run. Next becomes the dividend. So dividend starting yield is 5.5%, which is shown here. That splits into a $5.20 dividend rate for the whole year. That'll split into $1.30 per quarter, which is good. Good dividend yield, and actually at the minute they've just raised the dividend by 10%, which is a massive hike, especially in this current climate with coronavirus going on, which gives it a 6.5% starting yield. If it was roughly around the same price in February 2021, which is when it's payable, which is also very good. Moving on, the earnings per share this year has been $8.94 per share. Again, very good, very profitable company. Seem to have good margins in the revenues, and they seem to be growing it quite nicely year on year. There's actually not been a year since it IPO'd where the earnings per share has not at least increased, which is also good. These two are your PE ratio current and the 2021 earnings per share estimates. So I got this from Yahoo Finance. Yahoo Finance and Seeking Alpha have very minimal differences in their forecast. So judging off the two, I've just hit the midpoint, but it's like 0.03. The difference is $10.49 per share estimated forecast, which actually means that analysts, as a togetherness, believe that this company is going to be a little bit, well, say a little bit, probably about 10% more profitable next year than it is this year, which is very good, especially in the current climate. Like I say again, with economies coming to a halt, you've got coronavirus, we've had the election, we've had stimulus in America, which has been at a halt since early October. So it's just looking good, especially for ABBVIE, and I think it's kind of gone under the radar a bit. At the moment, it's a current PE of 9-ish, which I absolutely love. That is great value for a starting price. I think it's very undervalued at the minute, in my opinion. My current average price on it is about 87. I could have added to it on the dip, which I believe was around about $80, around about start of November time when we had that dip in the market. So your PE ratio's 9, which is absolutely brilliant. I think it's a great value for what ABBVIE stands for. Right, next goes into things I love. Things I love is everybody needs healthcare in any kind of economy. That just basically means it's not going to go away. It can only grow, because people aren't just not going to get sick or not going to get arthritis, which ABBVIE is quite high in, or leukemia or cancers. And again, it's got a very good starting yield. The starting yield in this sector is probably 2% higher than anything else you can really find, like your likes of your Merck, your Pfizer, and it's just a really good starting yield. Next, we've got good dividend growth. Like I said before, it's hiked its dividend recently by 10%. It's averaged over the last 5 years to up its dividend by 22% year on year, which is absolutely ridiculous. I think I worked it out. I've got around about a good fair few shares, but worked out it gives me an extra $15 a year just for nothing, which is absolutely brilliant. So if you get those sort of raises every year, they will really start to compound, and you'll really start seeing the results of the snowball going down the hill. Next, again, comes to demand for ABBVIE products. ABBVIE, I don't know whether you know, is a pharmaceutical company. They do and sell drugs all over America, so they have a real foot in the American market for very important drugs such as Humira, which we will go on to. They The growing population means an increased demand for ABBVIE products. So what that'll mean for ABBVIE? ABBVIE, if a growing population, not just in the United States but worldwide, grows, ABBVIE products will actually need to keep up with the demands of the population. So therefore, they will need to produce more to serve the customers that need it, which will obviously increase revenues. It'll be great for business and that sort of thing, but maybe not so good for the planet. One risk factor I could find with ABBVIE at the minute, which is kind of what's been priced into this PE here. Market take uncertainty, as you know. They like to be dead certain of where a company's going to be on a certain time and roughly what they're going to earn. ABBVIE, its biggest drug equates for about 40% of its revenue, which is Humira. That licensing ends in 2023, so therefore other companies can kind of use the copycat version of it, so the revenues will decrease from that. But on the other hand, they have many drugs which are up and coming to more than equate for that revenue, and I'm quite confident that the management is going to find a way to kind of subsidise what's being lost from that, and if not surpass it with drugs which they could have in their pipeline for the next 3 or 4 years and really go big on them. So I'm very bullish on ABBVIE at the minute. Again, we'll run through it again. It's got good dividend. If you want some takeaways, good dividend. It's very profitable at the minute. It's got a really nice valuation with a price to earnings ratio of 9.07. Just call it 9. In this current climate, it's good healthcare. So healthcare in any economy, I think it's safe. It's not going anywhere. It's not got risk of bankruptcy or anything like that. The dividend growth's the main point for this. So it's increased it every year for 7 years, and that is more than skyrocketed its dividend. So that is absolutely brilliant as well. And a growing population which sits in the hand of ABBVIE, and there's only one real risk to it, which is quite arguably not that much of a risk when you look at the drugs they've got up and coming and the way they're growing year upon year. So hope you took something away from this. It's just my quick analysis on ABBVIE really. I think it's a good company, and I think all the fundamentals are pointing to a strong and healthy future. So let me know what you think in the comments down below. It's my first video, it might not be the best kind of thing, so bear with me on that one. And just leave me a comment, let me know current stock picks that you're liking, or stocks that are on your radar, so to speak, and just let me know what you feel is going well in the market. Subscribe, obviously, hit the like button, and we'll be back tomorrow with another little